And we are live. It's
Hello.
money. We talk money in the morning. We're looking at your private property, real estate, finances, trading, stocks, crypto, our favorite. And we have Bruce here with us. How are you, Bruce?
Good morning, David. Good morning, Texas and Louisiana. And good morning, world, of course, streaming around the world. Thanks for having us on Smart Money Culture TV there on your television sets. Early 5 a.m. in Texas, top of the morning, money in the morning. What a lot of stuff going on. Pretty interesting show we have up here. Of course, we'll have Matt Dixon joining us shortly. I'm doing well. How are you, David?
All good, all good. Everything is well. Of course,
We,
we have these bull markets running,
we do.
and yeah, things are looking pretty good in the markets. They want to keep the markets good because the politicians are acting crazy behind that scene.
They are. I'll tell you what, the arms dealers are going absolutely nuts over here. I was just reading a report Lockheed Martin has just added that they are going to they just announced they're making some more armaments. So that's those guys are making a lot of money. They're making a lot of money. Um,
Yeah, they're
so
not
that's
going out of
always
business.
what's that?
They're not going out of business.
They're not going out of business anytime soon. I'll tell you that. And you had the big push, of course, this week to get this $95 billion bill across the line. And they really the thing about it is now the information is so available to people that people are starting to get it. People like us are on TV now twice a day talking about it, forecasting exactly what was going to happen as it happened. They even came out with the Russian nukes in space story, which was just quickly batted down by everybody who knew anything. I mean, I don't know if you remember, you probably don't, but I mean, Reagan, his big thing was Star Wars back in the day. Star Wars, not the movie, but not Star Wars, but I guess it was Star Wars. I don't know. I think he called it Star Wars. I think it was an acronym, Star Wars or something like that.
Yeah,
And that was all that stuff up in space. We have nukes in space, and I'm sure the Russians have nukes in space too, lasers
yeah.
and nukes and everything else. And so just the fact that they're like, oh, Russian nukes, it's like, what?
I mean, of course, we know that they have drones flying around constantly, and at night you can see the satellites, and of course they're gonna weaponize them. It's just common sense of man.
Uh, well, yeah, of course. And I mean, this stuff's been going on. It's not like anything new. I mean, Reagan, of course, that was the 80s, 70s, 80s. I watched a quick report on it from Alex Jones as well.
And
And
Reagan did the Star Wars, and then we have Space Force with the Star Trek logo, the same logo as from Star Trek.
I know you're right. We do. Then we have Space Force with the Star Trek logo. Well, so I mean, today, of course, I think what's supposed to happen now is that the House goes on vacation or they go back to their districts or whatever this coming week. So today's Friday. Doesn't look like they're going to get anything across the line. There was a massive push to do something. It also doesn't mean that they can't push to keep people here for a bit longer. I think the big thing is, and the part that nobody really wants to talk about, I suppose, is that they really don't need Congress because the central bank can just front the money and then they do whatever. They're supposed to ask Congress. They're supposed to, but they don't need to. And but they don't want to show their hand as well because if they do it
Right.
without Congress, then of course that is a big problem. This $95 billion will cost every household in the U.S. about $1,000, and you're going to get that through a tax, but it's a sneaky tax. It's the inflation tax. But they will, as I always say, they will balance. The government's budget is always balanced. They always pay the bills, and so you look at how much they're spending, and that's what your real tax rate is, and that's why everybody's really kind of sucking wind over here right now because your tax rate that you're paying, putting together right now for 2023, is actually only a quarter of what you were actually taxed because the government spent $6 trillion and they're only bringing in about 1.5 trillion on their tax. So that other $4.5 trillion they also collected from you. They collected it the sneaky way in the form of inflation. And that's why the CPI data that comes out, this is kind of almost laughable, this 3% core inflation. I don't know how then they put that number together. Well, I mean, I know they rent and this and that and the other, but that's not what we feel. What we feel is much, much higher than that. And that is to collect the money that they spent. Already this year, they've spent nearly $2 trillion. So if they spent $6 trillion last year, and they're on track here at the end of February at $2 trillion, we could be really in bad shape by the end of the year if we don't get this under control, which it doesn't really appear that we will, to be honest.
Yeah.
And that's why everything keeps going up. The markets are responding very well. It looks like China printed up a bunch more money. The Hang Seng is up sharply. The Hong Kong Stock Exchange. I just share my screen here for a minute. See here. Oh yeah, did I talk about this? The $100 trillion bill from Zimbabwe.
No, you didn't.
I wonder if we're going to get there just one day soon. Okay. I must have had that set to go off on my. Okay. I'm like, why is that not there? Okay. Let me just start down here with the Hang Seng. The Asian stock markets are mostly up, with the Hang Seng Index, HSI, Hong Kong Stock Exchange, leading the way up 2.5%. China is printing a lot of money, punishing savers by diluting the money supply, inflation. And this is pushing the price of stocks higher across Asia. And it's also pushing crypto up. A lot of that money is flowing into crypto. Dow futures right now are down slightly going into Friday morning. See how that continues plays out. Bitcoin is down about 0.5%. And that was about 30 minutes ago. It actually has jumped since then. Let's take a look where we're at now. Global Boost trading at about 2.5 cents there. So in the last hour since I posted that, it has gained and is now not down at all at 52.286. That's as the big guys come in. It's 6 a.m. here on the East Coast, 6:15. They'll open up their positions, and it looks like everybody's going long today. That's what it looks like. The bull market, David. It's the bull market. Looks like they're going long. That's what that would indicate to me.
There you go.
Yeah. So, Solana was down over 4%. I guess let me just go ahead since the market's moving. Let's look at this live. Solana down about 3.5% right now, trading at 112. Ethereum, the second largest cryptocurrency by market cap, trading at 1% up, 2826. Matt will chart some of these for us. BNB is on a pretty nice run here. 356. It went up yesterday. It was up in the 60s. Yeah, there you go. 63, 64. I think that one will probably go to $1,000. We're not financial advisors. We're just monetary revolutionists.
Yeah.
XRP 56.98 trading at up over 3%. That one is a favorite by a lot of people. Very popular token. It is the central bankers. So keep that in mind when you're doing your stuff. That is the central bankers. So they might push it to $10, but they might not. They probably will. Let's see here. Since we are doing live, since we're just doing live stuff here. Okay, oil is down about 1%. Really, I like to keep an eye on oil because I feel like I know if this oil number goes up above $80, you're going to start to see inflation really go. And they've been able to keep this down. However it might be the U.S. producing a lot of oil, but they've been able to keep this price reasonable, I would say. I mean, reasonable is a relative term. We're all paying $3 and $4 for a gallon of gasoline. It's ridiculous.
Right.
Yes, that's right. The pound. I've been watching this because, of course, Matt Dixon has predicted that we have a flippening that's going to happen here. So I opened up a massive short on the Greek British pound. Hope he's right.
Mm-hmm.
I think he is. I think that we'll have the flippening of the pound with the dollar. The dollar is going to pass the pound. That's Matt's prediction this year. We'll have Matt join us in just a couple minutes here. We are going to commercials on Smart Money Culture TV. Thank you for joining us there on Smart Money Culture. Going to commercials right now, and we will be back in 3 or 4 minutes there. Pakistan. Well, let me go back to my thing here now. Okay. Talked about these already. Gold is up a bit, trading at 2018. Buy gold at dealer cost by joining the club at costmetals.club. Follow that for our referral link. Silver is on a pretty nice run, up slightly, about 0.5%. It's up over 6% on the year. Look at this. Pakistan protests rigged elections as the most popular political figure in the country, Imran Khan, is still in jail. Look at this.
Wow. Insane.
It almost looks like a concert or something. Well, we talked about it yesterday as well. Imran Khan, he was a famous cricket player, is what Matt told us. I knew he was a famous guy. I think he's been in some movies and stuff like that. Really just a massive political figure in Pakistan. Very, very popular. They have him in jail right now. We have this stuff happening all over the world. It's pretty crazy. I mean, that's what they're trying to do to Trump, trying to put him in jail. He's got how many court appearances this year? Like, it's like crazy.
Yeah, the Coachella.
Yeah,
it's pretty awesome.
Coachella. All right, I was gonna pull up that, but since we brought up this, I mean, this is the Fani Willis videos are just hilarious. I gotta play some of these before we pull Matt on. I mean, this stuff is like, you just can't make this stuff up. You cannot. All right, look at this. Here she talks. She basically implicated herself in campaign fund.
Whole life, when I took out a large amount of money on my first campaign, I kept some of the cash of that. Like, to tell you, I just have cash in my house. I don't have as much today. Whole life. When
I said, did Fani Willis just admit in court that she misused campaign funds?
I know.
Let's watch that one more time.
They're having a rough time.
She's having a rough time.
Whole life. When I took out a large amount of money on my first campaign, I kept some of the cash of that. Like, to tell you, I just have cash in my house. I don't have
kind of just like rubbing it in your face in a way.
I mean, it's the worst part about it is that our legal system is so corrupt. I doubt anything's going to happen to her.
Well, that's the whole thing. They're trying to work with. They're trying to work with them so much.
They're trying to what?
Work with them so much.
Yeah. Well, yeah, exactly. It's a good way to say it, I guess. Like, we're supposed to have certain people there in certain places so much that we're going to allow stuff like this to go on. Listen to this too. Terrence Bradley just basically said that the National Bar Association told him how to not answer questions about Fani Willis and Nathan Wade.
Refer to what I was told by the bar that Rule 1.6 of confidentiality applies, and that I would be asking for an immediate review by the Supreme Court.
Sure, but applies to what?
Any communications is what the person at the bar told us.
Any communications? So like
He did not
if you
qualify.
talk to Mr. Wade, that's covered.
Well, Judge, I don't know. He didn't go into those specifics, but this is what was told. I was sitting there with my attorneys. Refer to what I was told by the bar that Rule 1.6 of confidentiality applies, and that I would be asking for an immediate review by the Supreme Court.
Sure, but applies to what?
Any communication is what the person at the bar told us.
Any communications? So like
He did not
if you
qualify.
talk to Mr. Wade, that's covered.
Well, Judge, I don't know. He didn't go into those specifics, but this is what was told. I was sitting there with my attorneys. Refer to what I was told by the bar that Rule 1.6 of confidentiality applies, and that I would be asking for an immediate review by the Supreme Court.
Sure, but applies to what?
I mean, this case had a lot of
Any
highlights.
communication
That's for
is
sure.
what
I mean,
the person at the bar told us.
well, the funny part is, yeah, I won't even like.
He did
I-
not
like-
If you
qualify.
talk to Mr. Wade, that's
It's
covered.
it's
Well,
crazy because
Judge,
they're not
I
even
don't
like
know.
answering
He didn't go into
questions,
those
right? It's like they
specifics.
really just
Um,
have no, and she's just appears to just be lying. I mean, this is I won't play too much of it.
Well,
You see,
Mr. Sena, thank you. We're going to take.
it is a lie. It
We're
is
gonna-
a lie.
Ms. Willis?
You see.
Mr. Sena, thank you. We're going to take 5 minutes. Be back in 5.
May I go to the
Oh man. I mean, I could go on and on. It's really a sad state of affairs. It is a sad state of affairs. Let me play one more clip just for good measure, and then we're gonna bring Matt on.
Object to you getting records. You've been intrusive into people's personal lives. You're object to you getting records. You've been intrusive into people's personal lives. You're confused. You think I'm on trial. These people are on trial for trying to steal an election in 2020. I'm not on trial, no matter how hard you try to put me on trial.
So my question was,
Object to you getting records. You've been intrusive.
I mean, from the chair there. I'm not on trial. Hey, you gotta have it mixed up here. You're on mute, I think.
There we are. It's gonna be interesting to see how the judge and the attorneys they react to this, because all of them except maybe one person's on her side, I believe.
Of
So-
course they are. It's like ridiculous. It's ridiculous. I can go on, but I can't. I don't want to dig myself into a hole. Let's bring on Matt. Let's talk money. Matt, Mr. Matt Dixon, how are you?
I'm good, thank you. How are you guys?
Doing great. And we are back live here on
Yeah.
Smart Money Culture TV in Texas and Louisiana. Thanks for joining in. Matt, markets are just really going, huh? It looks like we got a lot of money that came in out of China.
Absolutely, yeah. So I'm sharing my screen straight away here, which hope you can see that.
Yes.
I mean, these are the times that I tend to get a little bit worried, when the market's starting to get frothy. And I've used
No, it's just going up. It's going up only.
It's going up and up and up, and it can't go any other way. And that's what we're hearing. So, Yeah, I was talking to some smart people last night, and they can't see it going any other way than up, and it can go up for a long time. So I've again using some of the material from this guy Sid Norris. He's a long, as I say, even older than me, Elliottician. I wanted to look at the long-term views of the markets, the Dow, because we've got such a long history. We can look at crypto, and we'll focus on that just towards the end. We've only got a few years worth of crypto we can look at, but it's quite interesting when we look at the whole history of the stock market, looking at the Dow right back from 1896. We're talking almost 130 years ago, and this is the long-term chart, and it's basically just showing that we're working towards finalizing this fifth wave in this. He's calling it olive, this color, in super cycle degree. This is a really long-term degree. And these waves, they go up in 5 waves and go down in 3 waves, usually 3s or combinations of 3. And that's the way Elliott wave works. But within each 5-wave structure, every impulsive wave has 5 smaller waves within it. And then each impulsive wave within that has 5 smaller waves. So they're kind of like Russian dolls, waves within waves, but they work on a fractal basis. So you can look at it on a big scale. And that's what these scales are here. You've got super cycle degree, primary degree, intermediate degree, and so on. It goes down to really minute degrees. And they're all just different scales that you're looking at. And it's quite interesting that it does tend to work on whatever scale you look at. So this is looking at the really big scale, and you can see the big events that have happened. But basically what they're saying is that we're almost towards the end of this immediate 5-wave cycle in olive, which is super cycle degree, which would mean that they're expecting a major pullback. Now, the thing is, they're looking at such a big scale because super cycle degree is looking at 130 years worth or whatever of price history. Mm-hmm. And so even little movements on this scale are actually quite big movements. But he's got basically targeting, there's a number of ways you can measure it, looking at the different waves. He's looking at targets for the Dow of around 41,000 to 43.6. That's the sort of range he's looking at for an ultimate top before we get a massive crash in the market and major pullback. But we'll focus a little bit on the shorter term, because that doesn't mean obviously we're around 38,000 right now on the Dow. So potentially still quite a bit higher to go. But let's just see where we are on a slightly shorter time frame.
That's a considerable bit higher.
Yeah, potentially quite a bit higher. But that's the ultimate wave 5 that we've got here in this olive, this big 5 number here, which is higher. But we're actually at this moment right now. You can see here February 2024, where we have potentially an X wave here. You can see it labeled just up here, and potentially moving down quite substantially. So it's looking what they call an ending diagonal, wave 1, 2, 3, 4, 5, or wave 1. There's a couple of options, but basically whichever option you're looking at, they're saying that we are probably getting close, sort of 41 to 43 region, getting close anyway to a potential top in the market. And most likely we are very close to the immediate top in the market. So interestingly, again, they're looking, remember I said yesterday that, whether it's yesterday or the day before, about this thing called divergence, where basically the market is going up and you're getting higher highs, and you got RSI going down, the equivalent peaks going down. And that's telling you, and we'll look at some information about positioning later, that the big players are basically the real big players are out of the market now. They're taking their profits. They took the profits here. That's what caused this wave 4 sell-off. They took their profits. That's why the volume came out of the market, because the big players took their money out. And now it's the small players pushing the market higher on all this euphoria. It's like a bubble just inflating on this euphoria. Everyone's talking about the markets going up, but actually the volume is going down and down and down, because the big players have exited or are exiting during this period, this final period. And it might go quite a bit higher, but even so, they've taken such massive profits over the term. A lot of these guys have been invested since after the financial crisis, when we had that major crash back in 2009, and markets bottomed. That was when the likes of Warren Buffett and so on were saying, blood in the streets, that's time to buy. And that's when a lot of the big institutional players, the big whales, were buying this market, and the market has been going up. Now we're seeing this, we're getting towards the end, and they're closing out their positions in the final fifth wave, and that's why the volumes. And we had a fifth wave, by the way, back here as well. Basically, here from here to here, there's a fifth wave. This is you'd see the fifth wave in black. So there's a fifth wave in black, and that, again, we got divergence there, which warned of this impending sell-off which happened. So you can see from this black wave 5, we got a big sell-off from there. That was in that was the .com crash there. So we're in a similar sort of situation. Not saying it's absolutely imminent, but there's indications that we're in that sort of scenario. So that's quite interesting to look at. And then we can see really pretty much right up to date where we are. Looking at the potential scenarios, I said there's a couple of scenarios here. And we can see this is actually a really interesting one. I like this because it talks about the Fed's last rate increase when the bond yield's inverted. So the bond yield inverted, and what that means is that when you look at the bond yield curve, that long-term rates are basically lower than short-term rates. That is unusual, and that is nearly always a warning sign of recession coming. So the way you work out when the recession is going to hit, so you've got inverted bond yields. Those bond yields, actually the inversion disappears, but then you get the Fed rates, the Fed's final increase. And then normally, on average, just looking historically, there's an 11-month delay until the onset of recession. So the Fed's last rate increase was July 2023. So if you then go forward 11 months, you're talking potentially about recession starting June 2024. So this is just using historical probabilities and, oops, got a mosquito there. Looking at historical probabilities of what the market is likely to do based on past history. And it's happened over and over and over again. So it is reasonably predictive. And we're talking here where, this is February 14th, Valentine's, so just a couple of days ago. That, I think, was when we got the bit of news out about the higher than expected inflation out of the US, and we got a slight sell-off. That may have been the final top in the market, or we may have a little bit higher to go. But what I'm saying is there are a lot of warning signs just flashing now, flashing red, that potentially we're set for a pullback. And even if it's the minor pullback to this level here, that's not minor. That's still a 20% pullback. Or if you got
massive for the stock market, massive.
Absolutely, yeah. And if the wave count is the alternate wave count, potentially it's even bigger than that, potentially a 40% drop in the market. So I do think we're getting close to a substantial fall in the market. So I would say, whatever you do, congratulations if you're in those long positions and you're doing really well with it. Probably a good idea just to put a protective stop loss to ensure that you're guaranteed some profit no matter what happens in the market. And you can do a trailing stop and actually leave that stop loss in place. But if the market continues to go higher, it can actually drag your stop loss up with the market. So you can garner more and more profit. But it just protects you in case the market were to collapse to the downside. There could be some surprise event out of the Middle East or something. We don't know. So just saying, be wary. But again, congratulations for those who did ride the market up. It must have been a really exciting ride. As I say, I close my positions out. I don't normally use trailing stops myself because I usually find it just means you get less profit out of the market. But I know a lot of people who are still in the market. As I said, I was speaking to some crypto people last night, some really knowledgeable people who've done very well out of crypto over the years. They're miners. They really understand crypto very, very well. And they're extremely bullish on crypto, especially with the halving coming up. And this massive institutional interest. There's more and more money now coming into these ETFs. There's new applications for new ETFs. So the money is flowing into this maximum amount. When I say maximum, there's only a limited amount of Bitcoin available. The halving will mean the supply diminishes even further. And that situation just continues on and on. So there's going to be more and more demand for effectively fewer and fewer Bitcoin supply available. So I think long term it's looking really positive for Bitcoin, as we've said many times. So again, here's just an interesting look at the Dow. I think we looked at the Dow and the S&P. So this again is looking at this circled area, or within the oval, not circle, is the 0.618 of wave 1 to wave 3. Oh, sorry, this is 0.618 of the A wave. and basically it gives us a target of roughly where we are now, 38.8 on the Dow. So there's a potential top in the market. So I think we need to watch that really closely. This is what I mentioned about commercial positioning. So these red areas are just showing, you can see the massive decline in commercial long positioning in the market. So this is basically telling you that the big players are out of the market. The commercial, they're negative basically. They're negative the market. They're going short the market, or they're out of the market. Whereas the retail players down here, you can see retail is actually up at a peak at the moment. So this is exactly what I was telling you. With this divergence signal, the institutions and the big players are either out of the market or they're short the market. The retailers are still chasing the market higher. And
wow,
they're very, very euphoric. The market's all-time high, Bitcoin 52,000. They want to chase it and get, it's amazing. Bitcoin could go to 100K, could go to 250K, it could go to $1 million. Who knows? And this is what everybody's getting wrapped up in at the moment. But nothing ever goes quite in a straight line. And I think we may at some point be getting a pullback. Here's again just further information. The SPX.
this is the U.S. dollar index. Well, I guess it's not the U.S. dollar index. It's a handful of currencies.
No, this one. No, that's the DXY.
Oh, you're right.
Yeah, so SPX is the S&P 500 basically. And again, we looked at the Dow a moment ago. This is the S&P 500, and basically again, you can see this Feb 24 showing that we're banging our heads against this overhead resistance here. That potentially is a sort of termination of a B wave. This will be what's called an expanded. It's probably an expanded flat correction, although it could be an expanded flat correction for wave 2. You'd have to look at the internal wave count, but basically it would tell you there's a 5-wave move to come to the downside, even if it's a flat or a zigzag, a 5-wave move to come to the downside, which could take prices down very, very substantially. But that's not the all-time, we haven't finished in the movement up to all-time highs. That doesn't mean we've hit this olive wave 5. It just means we're in the ending diagonal working towards it. So this isn't probably the all-time high for the markets. This Feb pullback is maybe a substantial pullback coming soon, and it may not be February, it could be March, could be April, who knows, but a substantial pullback, but it's still projecting new all-time highs to come, not much above where we are, but new all-time highs to come before a real major crash to come in the future. So here's my little chart, just looking at dollar index that we looked, it wasn't the actual one we looked at yesterday, but just showing you that I projected basically we've got an ABW, ABX, A expecting B and Y to finish the movement in the dollar index. And this was the one that you just mentioned, the DXY, before probably a really major crash in the dollar. But that's looking, if you look at it here, if this is right time-wise, we're looking at maybe 2026 before the dollar actually collapses. So before that time comes, yes, we've probably got a bit more of a rise to come in dollar, which could give us that short-term downturn that we mentioned. So this aligns again with what we just looked at with the stock markets. Potentially, if dollar goes a bit higher, we've got a bit lower to go with a pullback perhaps in the market. But then if dollar comes down substantially, we could see an inverse reaction with the stock markets, where the stock markets rally again here. But then this move up here could actually be, this could be quite serious for the markets. This could be very, very negative if the dollar strengthens this much. And this would probably mean some kind of trouble in the world. And this isn't looking 26. This is looking, if this were correct, maybe latter part of 2024, maybe autumn 2024, sometime, maybe even after the election, who knows? But potentially something quite negative to happen, at that time, where we see a big sell-off in the dollar, but actually it could be, it could be good for markets. But then following that, as I say, this big rise is going to be negative for the markets. This is just a slightly interesting one. Again, the Dow, we think that the Fed are controlling everything. They don't. The Fed are reacting to markets, and they always say they're basically reactive to market news. It's quite interesting that when we look at the bond futures, that we can see bond prices falling rapidly here from 2020-ish, and they're falling basically as rates were rising. As rates began to rise more and more, we saw the bond markets falling. And then basically, this is telling us that the markets are telling us that interest rates have now risen enough, and that the next change in interest rates is likely to be down. So the bond markets are leading the way already. So bond markets have already started to move up. And this means that, basically the next likely move is going to be downwards in interest rates. And that is telling you potentially recession coming. And remember what I said about the 11-month lag and potentially looking at June 2024, that recession will start to hit. So that's when we start to lower interest rates more and more. So as they lower interest rates, of course, bond prices tend to appreciate as they lower interest rates. So again, it all fits together like pieces of the jigsaw. You can look at the different instruments and see how they all fit together. So I won't go through this again, but this was just looking at that inflation, how it works related to recessions and so on. And this again is looking at the various Bitcoin, regarding the dollar index and the Bitcoin events that happened along the way, which again, it's just amazing how it's all dependent on the dollar. When the dollar turns, it means a big change in the risk assets. And finally, we'll touch on Bitcoin because it has rocketed higher. It's been amazing, hasn't it? But we do have this bearish divergence in place where basically you're seeing higher highs, consistent higher highs, but lower lows on the RSI. And again, that's telling you that most institutions and big players have taken profits out of the market already, and it's retailers pushing the price up, not with big volume because it's not the institutions, this is retailers pushing prices up. We are very much overbought on RSI. Yes, it can go higher, and this divergence can potentially be eliminated. If prices continue to rise, and we see RSI here go to take this into an upward slope, then that would mean that the divergence is eliminated. And that's possible. So I've said that this market is either A up, B down, C up, or it could be 1 up, 2 down, 3 up. And if it's 3 up, then we potentially could have quite a bit higher to go, even in this cycle on Bitcoin. We've already exceeded 1.618 if we count this as the top of wave 1. So 1.618 was here. You can see prices already pushed through there. So the next target logically would probably be 2.618 at 65,000. That's just below the previous all-time high. And that is possible. And if that were to happen, then this divergence would be eliminated. And so we could still potentially see an explosion higher. So all I'm saying is there's warning signs, be careful. But if you're in those long positions, some people might still want to ride the market higher potentially. But just beware because there's a lot of potential risk events in the world. Finally, we'll just touch very quickly again on Learn How to Trade. Thank you for those people who've already signed up and got involved. You can see all the different course involvement there. We mentioned yesterday about just the beginner package, which is the lower price package. Just going back, the beginner package is $249, and you can get 10% off that using this promo code TradeSmart10. But there's also a standard package, which is much more in depth. There's a study time of 5 hours a week, so it is quite in depth. There's quite a bit of study involved there. It's 10 modules of expert insights with live workshops and live AMAs, so you can ask your questions. You can get involved in the workshops. You can actually, see exactly how things are done. So that package is also available. That's the middle package that we looked at there. When I say the middle, that's the standard package, the $1,500 package. But it's very comprehensive and gives you, most of what you need to know about trading. So that's that for today. Great day on the markets, but we just need to be wary is kind of the message of the day.
Awesome. So if we look at that, the chart that you brought up, and then it had it looked like it had 4 different things on the bottom, and you had talked about the institutional. It was the one maybe before you kind of popped around a little bit, but it had the institutional people. That one back.
Oh, okay. Is this the one with the divergence?
No, back.
Oh, okay. That's institutional.
This one.
Yeah. So this is commercial positioning, basically open interest in the market. So you're looking really at, Yeah, these are the commercial. You can see the commercial interest there had dropped off as the market sort of gets towards the end of the cycle. You can see the commercial interest tends to drop off, which it has done. And then you can see at the bottom the lower one here. Just moving that out of the way. The lower one here is showing that the retail interest actually picks up. So the retailers always kind of follow the markets, whereas the institutions lead the markets. The institutions are thinking ahead, a bit like the Fed should be doing. The Fed tend to lag the market because, you know, when we looked at the interest rate lag and so on, when the last movement in interest rates, you actually see the recession coming 11 months after. Yep. And that shows that that there is a lag. When the Fed does an action, there's a long lag before it actually takes effect in the market. And that's the way institutions think. They think along the same lines, that they're thinking ahead and they're kind of thinking, you know, actually working out and predicting what's ahead of them in the market. So that's why they act before everybody else. Whereas retailers are not proactive. So that's probably a good way of putting it. The institutions are proactive. Retailers are reactive. So they just react to what they see in the market. So when retailers see markets rocketing up, retailers jump on board and buy. But the institutions are proactive. They're jumping ahead in anticipation of markets going up, but they're also jumping out in anticipation of markets coming down. So that's why you see these institutions already pulling out, because they're actually looking ahead. So yeah, they might get out early, but as I say, I get over and over again, Warren Buffett said, you know, his, you know, mistake, and that was like in inverted commas, tongue in cheek, his mistake was he always sold too early. In other words, he got out early, but that's typical of the people who really are in the know, who are looking ahead to what might be coming in the future. And nobody knows, not even Warren Buffett knew what's coming in the future. But as long as you get out, you take your profits and get out early, because if you wait for that actual crash to happen, it's usually too late. Like, you know, in 1987, when Black Monday or Tuesday, whatever day it was, came, the markets fell 25% in a day. You can't get out in time. That's how I got trapped in 1987, by the way. I was in the markets heavily. I was actually leveraged at the time. I was making so much money in the early 80s. I was, you know, so happy with it. But then when 87 came and I was leveraged, the markets collapsed. I was actually in what they call penny stocks mainly, because they were the big gainers in the massive run up. Yep. And when the crash came, you couldn't even get out because there wasn't even liquidity available. So you couldn't even get out of those stocks. You couldn't sell them because there's nobody there to buy them. So this is the problem. When crashes happen, liquidity dries up and nobody wants to take your positions because the market's dropping like a stone. Nobody wants to pick up your position. So you end up with massive slippage, getting prices lower than you want. So that's what these big commercials are trying to avoid by anticipating markets, being proactive, looking ahead. But the retailers, unfortunately, they just look at what's in front and are reactive. And clearly that's not the way you need to be. That's interesting. You know, I often use analogies with sports people that even with the tennis players, for example, you know, when they're playing tennis, knocking back and two so fast, if they're reactive, like a beginner, when they come to learn tennis, they're just reacting. They're using the brain to basically see where the ball's coming and then hit the ball. And they're not very good. But professionals actually automatically learn to anticipate where the ball is going. Even before their opponent hits the ball, they're already anticipating. They get into the part of the court where the ball is going to go to, and already swinging their racket, ready to hit, because they're anticipating. And this is why they're such good players and win consistently. They're professionals, and that's exactly the same thing. It's all about anticipating, and that's how you get the big edge in the market.
Amazing. Well, always great insight, my friend. We've wrapped up another week here on Impact Money. It's always great to have you on. This stuff is great. And a lot of that we saw, of course, with Grayscale and these guys closing their positions earlier. But as you mentioned, upside could still be massive. There's a lot going on.
Yeah,
so
it's very interesting.
Trailing stop loss, I think, is a great idea for people. You guys should, if you're trading, then learn how to trade.club. Sign up there. I put it out on my X account as well. We'll have some fun together.
Yeah, so that's the that's that one there. That's the learnhowtotrade.club with the Trade Smart 10 for the discount. Yeah, you definitely got to learn to pick up some professional traits if you want to be a consistent winner in the market. And yeah, I look forward to thank you again so much for anyone who's already involved, and look forward to seeing anybody else. It'll be a pleasure to have you on board. So thank you,
Awesome.
Bruce. Thank you, David, and thank you everybody for listening. Another great day in the markets.
Very well.
Indeed. Thank you, Matt.
See you next week.
Have a great weekend.
Next week, yeah. Thank you. Another week gone. Thank you so much.
Another
Right,
week.
cheers.
Another week in the books.
Yeah, man.
It is never a dull moment. Never a dull moment. You know, the markets, especially the stocks and stuff like this. Now it's a little different because you have the futures markets and everything like that. But Bitcoin never sleeps.
No, of course. And sometimes you have to just watch it go up. You can't go chasing it. That's when you get yourself into trouble.
That is when you get yourself in trouble. We know that, of course, firsthand. But you can see, yeah, I mean, it is pumping. If we do have that move, as Matt is saying, up to 65,000, that could be pretty interesting for people. And
listen to you. You're ready to go all in.
Oh no, I'm not. I'm just saying, I actually think it's due for a pullback. I personally, this is what happens. They'll keep it up high enough.
It could go to 65.
They'll keep it up. They'll keep it up high enough until everybody buys in.
Yeah, even you.
And then, poof! All the liquidity we got faster than a. Never mind. I won't say that.
I recommend you listen to Matt.
Huh?
I recommend you listen to Matt and stay a part of the 5% of winning traders.
Matt wins trades. Sometimes it can be frustrating because you will miss some of that upside.
Yeah, well, he's anticipating the next hit, like he's saying.
But the man wins the battle, the war.
Could go
Which is what it's all about, right?
Don't you think it's going up?
Well, I mean, if everybody's going long, then that tells you something. But there is, but at the same time, I just want to be upfront with everybody because there still quite possibly is massive upside. I don't want to, yes.
Well, that's another thing I am foreseeing. A lot of big institutional money is what I would say late, and they're getting in their positions now at 50,000. So there could be a long upside.
Yeah, I mean, it could. But I mean, if you look at that, I mean, this is not exactly the opportune time to buy.
buy high and sell low.
Buy high and pray to God it goes higher.
Could happen in crypto.
Yeah, absolutely. That's why I just want to be honest with it. But absolutely, we should retrace. But there's and nobody wants the fiat monetary system right now. People are not they don't want this. And even though, I mean, we're just so sick of it. We get taxed. We're basically taxed via our currency. Not basically, we are. We're taxed from using the dollar. Just using it, just being in it and using it. They're able to take our money, and so it's pretty annoying when your actual inflation is probably 20% or 10 to 20%. So every time you go buy something, it's that much more. So, and that's one of the reasons why when you see Bitcoin going up so high, of course, it's crashing against the dollar.
Yeah,
there's a lot of reasons for that, but yeah, it's funny stuff. So we have the show is absolutely doing well. Smart Money Culture TV, really making moves. Of course, Fly Mackey doing the deal, adding more stations, and it's pretty exciting. I know some of the stuff that he was talking about on his broadcast yesterday. You shared television stats. TV ROI is $6 for every $1 spent. So for every $1 you spend on TV advertising or advertising on TV, you get $6 back. These are normal ROI for television statistics. 80% of the U.S. population is watching TV on any given day. And this is even with, like, you know, obviously social media has taken over news, right? We get our news right away. But then even look what we do. We use social media the whole time we're on TV. TV is still this dominant figure in the house. My wife has it on. I mean, I can't believe it. She's even gone yesterday, and I walk in and she's got the TV on in the room, sitting there just running the news.
For the cats.
I mean, probably spying on us. I totally believe the TV has spy stuff in there, but that's another story.
Well, that's common knowledge.
It is common knowledge. The typical person spends over 2 hours per day watching TV.
I don't know who's typical anymore, but I know you're spending 2 hours a day watching us.
You're right. We'll be back on at 11 a.m. on your TV there in Texas and Louisiana, 12 noon on Eastern Standard Time. Baby boomers, approximately 80 million Americans born between 1944 and 1966, account for roughly half of all packaged goods sales, almost $250 billion. They control 70% of the USA's disposable income. Baby boomers watch TV from 3.2 to 4.25 hours per day.
Yeah.
The boomers, man.
I know. I mean, they have the time, I guess.
Apparently, they have the time.
And most of them love to soak up the knowledge. You know, you learn so much watching.
They do. They love to soak up the knowledge. 119 million TV households. I mean, this is just, you know, the stuff that as we put together, if you are there, I know there's trillions of dollars of disposable income in Texas. A lot of you guys are watching us right now. Maybe you're one of the people that reaches out. Maybe you're one of the people that just is silent, watches us longer, see what we're going to say, see what we're going to do. But if you're one of those people, if you have at least, I think the deal is you got to make at least $350,000 a year and have at least $100,000 in disposable income, and you want to get involved. We're making big moves. Go to smartmoneyculture.tv and drop us a note. We want your last $250,000 or $100,000. Don't be that guy. Okay, but if you have some money moving around or laying around that you want to leverage, we are making big moves. The average person spends 1,500 hours per day watching television per year. That's crazy. That breaks down to 62.5 days of the year of viewers' attention. The internet, newspapers, magazine are all under 200 hours per year for each comparison. So that's 1,500 to 200. Of course, now you have, social media in there as well, but the boob tube is sitting right there in their house. It's cost effective and a direct way to get your message out and promote your business at the same time, especially compared to other traditional advertising. And we use both. We're using both. You see on TV and in social media. We are through our hour here. I want to wrap things up. Thank you for joining us on Smart Money Culture TV in Texas and Louisiana. Thanks for joining us around the world. Live streaming on X and YouTube and all these other places. We'll be back in 5 hours with the Porter Brothers Show.
Sounds good, and we'll see you soon.
Cheers.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.